Most people shouldn't be in the stock market, not because they're dumb, but because they think like noobs, and noobs lose money every time. Here's the problem. The stock market is a machine designed to transfer wealth from the impatient to the patient, from the emotional to the logical, from noobs to professionals. If you don't know how the game works, you are the game. Noobs get hyped and excited when stocks go up. They panic when stocks go down. They buy at the top, sell at the bottom. They have no plan, no discipline, and no clue what they're doing. And then when they lose, they blame the market. No, it's you. Meanwhile, experienced investors, they print money. Same market, same stocks, different results. Why? Because they think differently. Today, I'm going to show you the 7 things experienced investors know that noobs don't. If you're losing money, it's because you're screwing these things up. Fix them and you'll start making money instead of donating it. Let's get into it. Number 1, play the long game or lose. Noobs want fast money. They want big wins now, and that's exactly why they lose. Here's the truth. The stock market isn't designed to make you rich overnight. If it was that easy, everyone would be a millionaire. But look around. How many people actually get rich quick? Almost none, because that's not how the game works. The stock market rewards patience and punishes impulsiveness. Noobs see stocks drop 10% and panic sell. Pros see the same dip and buy more. Why? Because they know something noobs don't. Short-term price movements mean nothing. Long-term trends make millionaires. Warren Buffett didn't get rich buying and selling every week. He bought great companies and held them for decades. Amazon, Apple, Google, every one of these stocks had huge drops along the way. If you sold every time they dipped, you missed out on millions. So ask yourself, are you here to play the long game, or are you just another noob chasing quick money? Because if you're the second one, you're guaranteeing your own failure. Number 2 is buy businesses, not hype. Most people don't invest, they gamble. They don't research companies, they just buy stocks because it's hot or everyone's talking about it, and then they wonder why they lose money. Here's a question. If I offered you a business that loses money every single month, would you buy it? Probably not. So why are you buying stocks that do the same thing? Noobs chase hype. They buy companies with zero profits, no revenue, and a fancy story. They tell themselves, this will be the next Google, Nvidia, or Tesla. Meanwhile, the company is bleeding cash and burning investor money. Pros do the opposite. They buy companies that make money today. Companies with cash flow, growing profits, and actual customers. It's not sexy, it's not exciting, but it's how real wealth is built. Think about Amazon. When Bezos started, he reinvested every dollar into the company. The stock was volatile as hell, but under the surface, the business was growing. That's why investors who understood the fundamentals got rich. So next time you buy a stock, ask yourself, would I really want to own this company? Number 3 is commit or quit. There's no in between. Noobs change their minds every 5 minutes. They buy a stock, see a red day, then panic and sell. Or worse, they read some clickbait article and let the media decide their investment strategy. Professionals, they commit. Here's the deal. If you did the research and the company is strong, why are you panicking? Because the price dropped? That's part of the game. If nothing fundamental has changed, selling is just locking in a loss like an idiot. But, and this is important, pros also know when to pivot. Tesla is a perfect example. For years I was bullish. The fundamentals were strong. But now, market share is shrinking, margins are collapsing, the brand is damaged, so I sold. And let me stop right here, because I already know the Tesla fanboys are about to come at me, screaming, "You don't get Tesla. Tesla is more than an EV company. They have FSD, energy, batteries, robotics. They're going to change the world." Yes, I get it. And that's been the story for years. Where's the revenue? Where's the profit growth? Where's the actual business performance backing up the hype? And have you seen Tesla's stock chart lately? It looks like a dumpster fire. And I'm glad I sold over $1 million of Tesla stock in January. This is what separates pros from noobs. Pros commit when the fundamentals are intact and adjust when they change. Noobs just react to price movements like headless chickens. So ask yourself, are you actually investing or are you just guessing? Because if you don't have conviction in your investments, you have no business being in the market. Number 5 is fail to plan and plan to fail. Most people don't invest, they react. They see a stock moving up, get excited, and buy in. Then the second it drops, they freak out because they have no idea what to do next. Noobs have no plan. They buy a stock because it feels right. They have no exit strategy, no profit target, no risk limits. They're just winging it. And that's exactly why they lose money. Professionals, they have a system. Before they buy, they already know how much they'll invest, what price they'll buy at, when they'll take profits, when they'll cut losses. This isn't optional. This is how you win. If you don't know your exit strategy before you enter a trade, you're gambling. Imagine building a house with no blueprint, just throwing bricks around and hoping it works out. That's how most people invest. Pure randomness. Look, the market is designed to take money from people who don't have a plan. So ask yourself, are you making strategic moves, or are you just another noob reacting to every price fluctuation? Because if it's the second one, you're setting yourself up to fail. Number 6 is only risk what you can afford to lose. Most people have no clue how to manage risk. They go all in on a single trade, use margin they don't understand, and when things go south, they blow up their account. Noobs think risk management means not putting too much money into a stock, but that's not how pros think. It's not about how much you invest, it's about how much you're willing to lose. Here's the rule. Never risk more than 2% of your total portfolio on a single trade. That doesn't mean you only invest 2% of your account. It means you cap your potential loss at 2%. For example, if you have a $100,000 account, your maximum risk per trade is $2,000. So if you buy a stock at $50 per share, you set your stop loss where your max loss is $2,000, not your entire position. For retail investors, this number might be slightly higher, and that's fine. But noobs, they risk way too much. They YOLO into a stock, take a 30% loss off of their account, and then wonder why they're broke. Risk management is what keeps pros in the game. Noobs go all in, lose big, and never come back. That's why they fail. So ask yourself, are you playing smart, or are you just rolling the dice? Because if you don't control risk, you will lose. And number 7 is winners think differently. Noobs believe the market is against them. They say things like, the hedge funds manipulate everything. Retail investors can't win. The system is rigged. You know who says that? Losers. Pros don't make excuses. They study the game, adapt, and win. They know the market isn't against them. They're just playing by the wrong rules. If you sit down to play chess without knowing the rules, you're going to lose. And if you blame the game instead of learning how to play, you'll always be a loser. The stock market is no different. If you think the game is unfair, you have 2 choices. Number 1, cry about it and keep losing. Or number 2, learn the game and start winning. So ask yourself, are you the kind of person who figures things out and makes money? Or are you just another noob complaining while your portfolio bleeds out? Because at the end of the day, the market doesn't care about your feelings. It just rewards the people who know how to play the game. Do you want to trade like a professional? Here's your shortcut. You have 2 choices. Number 1, keep figuring it out on your own, make mistakes, lose money, and take years to learn the hard way. Or number 2, shortcut the learning curve. Get real-time trade alerts, daily market insights, and my top stock plays inside my Patreon. Look, you definitely can do this alone, but it's a hell of a lot easier when you have a proven system and someone guiding you. The link's in the description. I'll see you on the inside.